What's going on, family? This is not financial advice. Do your own research, man. When it comes to the stocks you choose, man, we're giving out free game for you, man. This market is in a range today, pretty much a range day. It was pretty difficult trading today. A lot of swings up and down, but the range was the main play for the day. The market is down negative 0.28%. It was up at one point, and then they were flat. So it was pretty much range like. We're going to get into a chart that I want you guys to see. As far as this recession, my man Larry, he got some free game for us, so we're going to tune in to him real quick.
To show you. I want to take a look with you guys at how past crashes compare to our current crash. This is a cool chart that was shared on Twitter by a group called Hedgeye. On the bottom left-hand side, you see a blue line that represents the S&P 500 currently. In the middle, you see an orange line that represents the 2008 housing bubble. And on the far right is a black line. That was the dot-com recession bubble. What I want you guys to see is how many times the market ripped up 10% or even 20%, and it was just a fake out. Look at the early stages of the recession here. The moves were all around 10% up and down, kind of like we're experiencing right now. And then later, as the recession progressed, the moves began to double. I also noticed that when it did get very close to bottoming out, it retested that area more than just one time, which means that we're not likely to get a V bottom on this recession. And the last thing I want to point out is that every bear market usually has 3 legs down, and we've only had 2 legs down so far. So are we due for another leg down? That's the question.
No one knows where the bottom is, and no one can guess the bottom. That's why you have to be willing to be fluid like water, because the market can throw a wrench in your plan, but you still should have a plan. So what has been our plan? We've been dollar cost averaging. And
so, as we've seen, Larry put us up on some game with Josh, and we see that this is a bear market rally, which we already knew, but it's just interesting to see exactly what could take place in this next month of September. So this chart, as you see, they broke this downtrend, right? So this is the bigger channel that they broke. They came to the key level above 4,020 area. So they're almost at the top of that range up there. So we want to see some type of pullback at this point. They might pull back to around 4,000 area to test that support area. If they don't, we could see a gap up to the highs of that range. So they made a break of this channel, 2 legs up, a measured move. They broke the key level, and they're in that range that they were in around June. That was about 2 weeks. They were going sideways in this market. So as you can see, 2 legs up. So we could be expecting a push down, some type of push down, but I'm expecting a fake breakout to the upside, maybe to 4,200 area. They did break this this uptrend. So we got a break, 2 legs down. They stopped at about 3,900, and now we have a leg up, about a measure move up to that target, and they stalled at the 50% retracement of the bigger leg down. So they're in this range, and I'm expecting them to come up to about 41. The target is about 41.76. There is a gap up there as well in this range box. So we could expect to see some sort of pullback tomorrow or the next day before they attempt to reach those highs. So just be careful trading. I would say best bet is to wait on the trend to develop, because the range day was pretty decent. It was kind of difficult, but I would say let the price action develop a little after 10:30 and see what they do, man. So Be careful trading this market, man. Like and subscribe to the channel so we can get you on this free game, man. And we'll see you guys tomorrow. Out.